This is Public Wire, and I'm your host, Duke Hillinger. According to Freddie Mac's OTCQB FMCC March forecast, the mortgage market is expected to see modest growth in 2019, sustained by lower mortgage interest rates. Sam Khater, Freddie Mac's chief economist, says the real estate market is thawing in response to the sustained decline in mortgage rates and the rebound in the consumer confidence. Two of the most important drivers of home sales, rising sales demand coupled with more inventory than previous spring seasons, suggests that the housing market is in the early stages of regaining momentum. Forecast highlights. Owing to the decline in residential fixed investment and consumer spending, as well as the effects of the government shutdown in January, we have lowered our GDP growth rate forecast for the first quarter of 2019 to 1.2%. We forecast GDP to regain its strength during the rest of the year, but expect overall GDP growth to decelerate to 2.0% in 2019 and 1.8% in 2020. Recent labor market reports emphasize the growing gap between job openings and available labor, as well as the slow increase in non-farm payroll, indicating a tightening labor market. We forecast unemployment to drop slightly to 3.8% in 2019 before increasing to 3.9% in 2020. The 30-year fixed rate mortgage is expected to average 4.5% in 2019 before increasing to 4.8% in 2020. Due to the recent increases in building permits, we anticipate that total housing starts will gradually increase over the next 2 years, with most of the growth coming from the single-family housing starts. Total housing starts are expected to increase to 1.27 million units in 2019 and to 1.33 million units in 2020. With mortgage rates down significantly from last fall, we expect to see existing home sales bounce back and trend higher for the rest of the year. We expect total home sales, new and existing, to reach 5.94 million units in 2019 before increasing to 6.14 million in 2020. Single-family mortgage originations are expected to increase by 1.6% to 1.67 trillion in 2019 and remain at a similar level in 2020. We have lowered our home price growth forecast to an annual increases of 3.5% and 2.5% in 2019 and 2020, respectively.